A Libert Seguros agora é Yellow. Tudo aquilo que já era bom continua igual. Excelência e proximidade permanecem como nossa essência. Porque não é uma mudança, é uma evolução. A Yellow está sempre em sintonia com você. É liberdade com segurança. A melhor experiência acessível a todos os clientes, iluminando cada passo da sua jornada. Deixe essa luz iluminar seu caminho. Yellow Seguradora. Seguro para viver livre. Consulte seu corretor.
Good morning, guys, and welcome to the podcast. I've got a fantastic guest for you coming out of Florida. He's in the financial planning space, Jude Wilson, and he's going to talk to us all about financial planning, how he helps clients. He's going to talk about Roth IRA, and hopefully we have some questions about this change in administration, what to expect, and I'm really happy to have him on the show. So, Jude, welcome.
Oh, thank you so much. It's a pleasure to be here. I'm excited.
Yeah, briefly introduce yourself and we'll dive right into the questions.
Sure. So I've been in the financial planning space for almost 30 years. I can't imagine saying that. I feel it was just yesterday that I graduated from college. But my journey to being an independent financial planner came through my desire to really learn about finances in general. My folks were Haitian immigrants who came to this country really for a better life for their children, but they didn't know anything about finance. They taught their kids, work hard, get an education, and someday you'll be successful. In fact, if I had told my mom about a mutual fund, she probably would have slapped my hand and thought it was some kind of wild party. But over the years, I've learned to really look at finance from a holistic standpoint, and I built a firm to look at it holistically because I've worked at several other organizations from insurance to banking to investments. And my desire was to build a holistic firm that helped clients with every aspect of their finances.
Yeah, so it's really interesting because I've seen a lot of financial planners and advisors branch out and just, they don't do the standard cookie cutter approach. And so talk about what separates and differentiates you from the other planners and advisors.
Most of our clients are affluent professionals and business owners, and they come to us after working with other advisors who usually have one area that they work with. Most advisors are investment focused or insurance focused. And when you only have one tool, you have a hammer, everything looks like a nail. By the time clients come to us, they're really looking for someone who can coordinate everything and give them a roadmap that they can follow that is consistent and that addresses all of their needs. And specifically, most advisors who focus on investments will talk about investment diversification. You've probably heard the term a million times. They'll put all your eggs in one basket, diversify. Very rarely do they talk about tax diversification. And because most of our clients are affluent or high net worth, taxes is a major issue for them. And that's one of the areas that sets us apart.
Yeah, one thing that's really interesting that I want to get into is just talking about what is this. You have this idea, this ticking tax time bomb. What is that?
I believe that because of the deficit that we have in the United States, the debt and the deficit, that at some point in time, we can't just kick the can down the road. The three biggest parts of the deficit are military spending, Social Security, Medicare, and Medicaid. And most politicians believe that's the third rail. So we've been constantly kicking this can down the road. But just like in your personal life, the bill comes due. And so we believe that people are losing money unknowingly and unnecessarily because either they're paying too much in taxes, or in the future, when they get ready to retire, the ticking tax time bomb is what we believe will be the fact that taxes will have to go up. In fact, I recently interviewed the former comptroller, U.S. Comptroller General of the United States. In his calculation, he believes tax rates will have to double in our lifetime to be able to manage the U.S. debt. So we're trying to prepare clients to be proactive to protect themselves from that affecting them, their loved ones, and their potential retirement and passing on in a healthy estate.
Which brings me to my next question is, that's really, especially the U.S. deficit is really approaching, quite considerable levels. And so you talk about the bucket plan approach, and what is the bucket plan strategy, and how can it help retirees mitigate risk while securing their income?
The philosophies that we follow pretty strategically in our firms, one is the bucket plan, and two, what we call tax filters. The bucket plan is 3 specific buckets, allocating your net worth in those buckets based on whether you're in the accumulation phase of your life, you're climbing up the mountain to get to financial freedom. Those are very specific rules to help clients get to that point. Or whether you're coming down the mountain, you've already reached financial freedom, and now you're using the assets that you've built to fund your retirement and your income. You were trading your time for income up until then, and now you want to trade the assets to buy back your time. So the bucket plan is a strategic approach to making sure your assets are segmented and are associated with a specific time of your life to make sure either those assets are growing or make sure that they're protected to give you the income that you need and to pass on a legacy. So those are the buckets. We call them now, soon, and later. And then we focus on what we call the tax filters. Not all money is taxed the same. So we want to make sure that you have the appropriate money in pre-tax dollars that you're getting a tax deduction from and are tax sheltered, but will be taxed later at whatever the current tax rates are. Post-tax dollars, money that you've already paid federal taxes on, but you're getting a 1099 or you're paying capital gains. And then what we call the tax advantage filter, money that maybe those are post-tax dollars, but they're sheltered from taxes currently and in the future. And so the combination of the buckets and the filters gives a nice visual for clients and makes it easy to understand our planning process.
Yeah, I really love that analogy, how you separated. And one particular area of interest for the audience is the financial planning for Henrys, the high earners, not yet rich. And so for the Henrys, what are some unique financial planning strategies for this demographic?
Yes, so Henrys, our clients are broken into different segments. Henrys, as you said, are the high earners, not rich yet. Typically, these people are making a much better than average salary, 6 figures, maybe sometimes even 7 figures. And they're in that accumulation phase. They're going up the mountain to get to financial freedom. Those particular strategies for Henrys are surrounded around, 1, making sure that they have sufficient growth of their assets, 2, making sure that they're not taxed overly. They're taking advantage of all the tax deductions possible. And then 3, making sure that they have a asset protection plan while they're growing their net worth to make sure that those assets are protected for potential lawsuits or things that could take away from the growth of their net worth. So that's what we focus on with the Henrys. And when you look at the buckets per se, usually their later bucket is their growth bucket. So we're really focused on that. And then as far as the filters are concerned, the tax filters, we're also trying to make sure that they have a significant amount of money in dollars that will be tax-free later on in life, and also trying to make sure they have enough tax deductions now so Uncle Sam isn't walloping them every year.
Yeah. The other question I have for you is on everybody's mind is the change in administration, and there's a lot of talk. You're going to decrease government spending, eliminate all this bureaucracy, eliminate all this waste. What's like the number one thing that clients are coming to you to talk about how to plan and position their portfolios for 2024 to 2028?
Yeah, that is a wonderful question. So now that the election is over, we know what direction that the federal government wants to take with President Trump being in office. And he has a pro-business approach. One of the things that he's proposed is reducing the corporate tax rate from where it is now to about 15%. And so when I look at clients, I segment them to come up with the best strategies. There are clients who are business owners and clients who are W-2 who get a paycheck. And the tax system is very different for both those groups. People who create a paycheck have pretty much an open door of tax strategies. People who are W-2 are very limited. So when we look at the potential corporate tax rate going down, that's going to help significantly. Businesses and business owners may have a little extra cash to be able to do some advanced planning. When we look at W-2 people, we're looking at particularly the Tax Cut and Jobs Act that was passed under President Trump in his first term. That is set to expire in December of 2025. And so now that President Trump has won a second election, we think that there's a possibility that Tax Cut and Jobs Act may be extended. And the importance of that is really the current tax brackets where they are now, because these brackets are lower than they have been in almost a generation.
And would these tax cuts, will they be like, for example, April 2025, will it be under the like Biden, or will it just, we're still up in airs on that?
Yeah, up until December of 2025, we're pretty sure that these current tax rates will stay in place. Now, either one of three things will happen prior to December 2025. Either Congress and the current president will vote the act into law, making these brackets permanent, or they will vote for a new tax structure, possibly even a greater reduction in the tax brackets. Or third, and most likely, what I believe is that the politicians are going to argue with each other, call each other names, and nothing is going to happen. If that's the case, then these brackets will revert back to where they were 2 administrations ago under the Obama administration, and the brackets were a little bit higher than they are currently. So it's really important for your listeners to understand and to talk to their financial professional, to be proactive now and look at some strategies that can prepare them either for these to stay the same, or worst case scenario for them to change. And so if we do nothing, then when these things happen, we don't have anybody else to blame but ourselves. But most people don't know that this is coming. So it's so great to have an opportunity to talk to you that we can get the word out. Sometimes I feel like Paul Revere, instead of saying the British are coming, I'm saying the taxes are coming. The taxes are coming. We need to be proactive and start planning for this.
Yeah, it's like I said, it's really, so the next question I have for you is, you talk about planning for inflation and market risk and retirement. One thing that's really interesting is, the quarter basis points. So far, they've dropped it 75 basis points this year. And so what specific strategies are you helping clients to manage inflation? And also, what sectors are you particularly interested in, for your clients?
Those are 2 great questions. Let's address inflation first. When you look at current interest rates, they are higher than they've been in over a generation. When I first started in my career, I was an intern for a bank. And believe it or not, you could get a certified certificate of deposit, a CD, that was paying 9-10% guaranteed by the bank. Those days are long gone, but the rates that we're seeing now are significantly higher than they've been in almost 20 years. So you're absolutely correct. The Fed has been reducing interest rates as they've seen that inflation is coming under the control. So one of the things that we're telling clients now is, let's take a look at your buckets and make sure that in your now bucket and your soon bucket, we lock in some of these great rates because the rates are coming down. So that's one strategy to make sure that clients are taking advantage of the current situation. Now, as far as what sectors may be growing in the future, looking at the potential business tax cut, when businesses get a cut, they usually either hire more employees or invest in research and development or buying more technology. So I would imagine, and I don't have a crystal ball, but if history repeats itself, the technology sector should be one that we should look at, because businesses will have more funds, more capital, and they usually try to reinvest that capital to give their businesses a boost. And technology could be one of the areas that they invest in heavily.
Yeah, really, they're saying chips, and also with the block AI as well. It's going to be really interesting. And yeah, it's going to be really interesting. The other question off the topic is, there's talk that maybe Jerome Powell, the Fed chair, may be replaced or ousted? And what effect would this have just in terms of market volatility, interest rates? How do you see that playing out?
The market likes stability. And in our country, unfortunately, we're in the camp where we're either on one political side or the other. But the market really doesn't care who's in office. In fact, if you look historically, the market has performed well under both Republican administrations and Democrat administrations. The delta, the difference between the two is very small. What the market does is they like stability and they like to know who's in office and what's their perspective for the economy. So Jerome Powell has been doing a fantastic job, in my opinion. Some people may disagree, but he's guided us through one of the highest inflationary periods we've had since under COVID, and created what we all hoped for was a soft landing, raising interest rates to reduce inflation, but not creating a recession. And he's guided us through that period. So I think it would be that we might expect some volatility if he is replaced. But typically the markets go back to a certain norm when the Fed chairman is either their term is up or if they're replaced. So I suspect that there'll be some volatility if he is removed, but then the markets will bounce back once they know who's in charge and what's their philosophy for the future.
Yeah, really interesting. And my prediction is if they actually trend towards interest rate will be down versus up. How can people find you and follow you and reach out to you and learn more about you?
There's a couple of ways, and thank you for asking. We have a website called thetaxbomb.com, THE taxbomb. And people who believe, like I believe, that the federal deficit will increase can get a lot of information about that and some real strategies to protect themselves. That is a separate website from our firm website. Our firm website is centrist, F as in Frank, S as in Sam.com. Our firm is Centrist Financial Strategies. So they can either go to the Tax Bomb website, get some information, or go to our firm website and learn about the firm and how to contact us.
Yeah, excellent. I really enjoyed this conversation, and the links will be in the show notes, and keep up the great work.
Thank you. You are doing fantastic work. I applaud you for how you've been able to become financially free at such a young age, and you're spreading that knowledge to other people. So thank you for what you do.
Yeah, thank you.